Hey Rebels, welcome back to the channel. In this video, I want to discuss the Bitcoin four-year cycle. It's a topic of hot debate, and I actually got a request on this recently, so I'd like to dive into my views of what the Bitcoin four-year cycle is, what it may look like when it ends, because eventually all models come to an end. So what is that going to look like, and when may that be, and how can we prepare in the future as this unfolds? So without further ado, let's just dive right in. As we know, Bitcoin so far has basically presented a repeatable pattern, 3 years up, 1 year down, very consistently, nice, pretty pattern, and it hasn't yet broken. And at the end of last cycle, many were convinced that it was going to be a 5 year cycle because of the debt refinancing and the interest rates and the ISM being in contraction and a whole bunch of other factors. And I also mentioned this on my channel as a possibility because we have to be prepared for the eventuality that this beautiful 4 year pattern isn't just going to repeat forever and we're all going to be able to follow this forever and be millionaires because it's that easy. The market just isn't going to do that for us. But everybody was expecting it to end, and so far it seems like it's still in play. It hasn't proven itself to come up with any other time frames yet because effectively it called the top pretty much on the dot, and we're in a bear market right now. And so, those who believed that it was a 5 year cycle are now like, oh, okay, well maybe it's a 4 year cycle, and okay, cool, everything's good to go. We can just buy in October, as usual, right? And so I want to give a backdrop of my entire investing thesis. Actually, has to do with the 18-year real estate cycle. So this is a chart that's basically compiled from many sources, and it's just a representation of the land cycle because the land cycle is really what it's kind of the largest tide and the biggest market across the globe. Real estate, land in general, is by far the largest market. And so as this thing goes up and down, it brings other markets with it. And they don't all time out at the exact same time. It's a huge market and it's very slow moving. And so it's not necessarily quite as obvious. However, it does have rhythms that go back several hundred years in a repeatable pattern. And this chart here is actually just a composite of many sources. And in fact, the last couple cycles, this chart was actually not hindsight, it was actually foresight, and it was able to effectively call the last two real estate cycle tops and their respective bottoms. So we'll go into the 18-year real estate cycle a little bit as we go through this because effectively I think this is going to be what breaks the Bitcoin 4 year cycle. And I think this is also what is going to catch a lot of people off guard because effectively the markets will go up for about 14 years or so, and then there'll be a 4 year kind of slowdown period. It'll peak, they'll go into a bear market. It's a pretty severe correction. And that to me is actually where the major opportunity lies. And I think there will be huge opportunity in crypto, although by that time, I'm pretty sure most people will think that there is absolutely no hope of ever recovering. So that is kind of the backdrop that I want to paint that picture quickly so that we kind of understand that. And I will actually go through the real estate cycle quickly, at least on the S&P 500 and what that looks like. Just going back in history, the last time we had the GFC, the global financial crisis, and we can just see that along after these periods, it's relatively uninterrupted to the upside, and you have brief corrections along the way, um, somewhere around the likes of like 30%, right? But these larger corrections, the end of these real estate cycles, have much more severe corrections, right? Like 57% there. And as we go back in time, we can see that this was the exact top, but you can start to see how the market just um, starts to show its weakness. These don't land like perfectly on the dot, but you can see in history how many times these corrections can be quite severe. 50% there. Um, and we're just kind of measuring these as we go. Some of them not as obviously severe, but they can absolutely rattle the markets. And then of course, the great financial crisis in the 30s, absolutely crazy, crazy, crazy time. So anyway, I just kind of went through that chart and wanted to point out some of the peaks and troughs, and you can kind of just see how in between these cycles, relatively uninterrupted to the upside. And then as the real estate cycle comes to an end and rolls over, it does tend to take other markets down with it, some more severe than others. But it kind of ends up being a break in the pattern. It's also aligns with the economic cycle. And so, yes, a lot of times also mid-cycle, you will have a slowdown period. That is all part and parcel. But this particular cycle is actually a very good representation in my mind, and actually the last cycle of kind of what people get used to. It just goes up and up and up forever, and then they forget that the markets can go down, and then it corrects against them very severely. So I think effectively people are not going to be prepared for this. It's just going to be business as usual, and they're not going to be prepared for a larger rollover from the stock market. Now, a lot of people are calling for crashes, but people are calling for crashes all the time. I mean, all the time, ever since I've been in the market, everybody's talking about this great crash that is coming. And yes, you can see that, yes, the market does give them, but for the most part, the markets go up, right? The other chart that I want to showcase this cycle with is the home builders ETF. This is just kind of a clean representation. This was the great financial crisis. We had a multi-year bear market, and then we come out of this. We do have a mid-cycle slowdown, and then right now we are kind of nearing that end of that 18 years. And it can be 18, 20 years. I mean, this is such a large market that it's not, you know, give it when it's such a long period of time, give it a couple years grace, either side, right? So anyway, this is another market that I've talked about on the channel that I'm watching like a hawk. It does seem like potentially we are rolling over. We've been starting to form lower highs and the like. We are getting currently getting support on this major 50% level. There's going to be a lot of other factors that need to happen in order to kind of confirm this breakdown. And then typically the stock market will peak 12 to 18 months after the real estate. Like I said, it's the real estate cycle leads, and then everything kind of follows suit. So anyway, that's the backdrop of my investment thesis. So I also want to just discuss Bitcoin as well. This particular cycle, and as well as a couple other things that I'm noticing, right? So one of the viewers of the channel had noticed, okay, well, we're seeing decreasing volume over time. What does that mean? Like, what does that mean for Bitcoin? Should we be worried? And I like this question because it's if you believe in Bitcoin and you're a believer in Bitcoin and you need Bitcoin to go up because that's what your investment thesis is based on, and you're heavily involved in Bitcoin and you have chosen Bitcoin to be the answer to your financial situation. I was one of those people, and in fact, a lot of my investing thesis is based around Bitcoin. It's the market that I'm most familiar with. It's the one that I follow the most. It's a relatively young market, so price history is relatively easy to track and all the rest of it. However, I do have to understand that, the promises that everybody has made, how Bitcoin is going to, well, for example, this cycle based on the power law, everybody was, just claiming that absolutely $500,000 Bitcoin for sure, it's guaranteed, it's just priced in, locked in based on these models, basically, which is a curve fit model that's it's too young. We're too young in this asset class to really, and it hasn't gone through a real estate cycle. And in fact, the great financial crisis is what basically started Bitcoin. So Bitcoin was its genesis was at the beginning of the this real estate cycle. So we were kind of coming through, and we won't really have all the information until we've rolled over and we're kind of continuing on again. And I think that's really going to be very useful data to see. And then how we go through the next real estate cycle, how does it react in the coming years, right? Like there's a lot of useful data that's coming up. So rather than being worried about what's Bitcoin going to do, let's let's follow the charts and see what the charts are going to tell us, right? And so right now, what the charts are telling us, well, according to this model, well, we've fallen quite short. Every other cycle, we've been able to, at the very least, get past the median, right? And we were staunchly rejected the entire cycle. And we had lowering momentum the entire cycle, the RSIs lowering volume and such over the cycles. So I would say that it's quite possible that we could be breaking down from this power law. I think that this power law is about to break and that we will not be able to follow the power law anymore. Not a model that I'm really all that familiar with, that I don't follow that much, but this is just something that actually had been pointed out to me. And even last cycle, we weren't able to get up to that peak, right? So and in general, like the asset class is evolving, maturing. It's becoming less volatile. So the idea that this is going to jump to 500,000 and it's guaranteed to be a million someday, potentially not in the time frame that people are expecting, and diminishing returns and all the rest of it. So I mean, honestly, like the law of diminishing returns, which we can tell every cycle, should kind of have been already a hint. So anyway, I digress. I do want to go through. I want to go through some other cycle analysis so that at the very least get an idea of what to expect. So, in general, as a basic thesis, I'm going to just draw something up here quick. My basic thesis is that wherever we go from here, quite possible that we have a third leg down. Usually we have, and I'll go through this, but usually we have like three stages down, right? So this isn't going to be matching time and price, but I'm just trying to give you an idea of what I think is going to happen. Effectively, we may bottom in that quarter three period, and then we will see Bitcoin attempt new all-time highs. Effectively, I think we're actually going to create a lower high from that point. And this will effectively be the peaking of the real estate cycle. We just won't have enough oomph and enough liquidity, enough interest. Bitcoin is still a risk on asset. I don't, and it's not, we could see higher all-time high prices. But the point I'm really trying to make too is that because we're in the environment of the real estate market peaking, I don't think that we're going to have substantially higher prices. It could be something like this, right? Where we don't have enough steam to get there, right? So however this bear market ends up being, I have a feeling that it's very likely that we could actually hit the 4-year cycle on the bottom as well. And really, at this point, this would be a left translated cycle where the peak of the cycle happens in the left hand side. That was actually what a lot of people were expecting to see. I remember around the halving last year. And effectively, if you take the cycle, cut it in half, actually bear market low to bear market low, cut it in half, like so fashion, cut it in half. Where do you find the peak? If it's a left hand translated cycle, then it is showing weakness, and if it's a right-handed cycle, then typically a stronger market, right? So what my thesis is that this coming cycle will be a left translated cycle, and we will actually find the peak of that in the left hand side, which will basically be the warning of the coming weakness. And then as we go into the multi-year bear market, that is the real estate market rolling over, and we get a multi-year bear market, I think that this is where the energy and the volatility and the faith in crypto and Bitcoin in general is going to go to basically zero. It's going to flatline. I have no idea what the price is going to do, but I'm pretty sure that by the time we get through that multi-year bear market, and start to see, you know, hope return to the stock markets and everything else like that, effectively this market is going to be so dead and quiet that nobody's going to be expecting anything. And I think that's where the actual opportunity lies. So do we need to be afraid of Bitcoin going down from here to there? No. And in fact, I think that we actually have some good tradable ranges coming up soon as far as good risk to reward in the shorter term, even though we may get a left-hand translated cycle. It doesn't mean that there's not tradable ranges, right? So if you're a trader, I mean, it's kind of just steady on, follow, and just, implement your risk management and understand the macro environment that you could potentially be in. So that's the overall thesis there. Now, I do want to go through, this is a long-winded video, and this is actually mostly for my viewer who requested this. So I appreciate you sticking around, and I know this is quite a bit of information, but this is my answer to that, because you're very right. If you look at this on a monthly chart, over time, the volume has gone down over time. And that's something that you want to pay attention to. I mean, I also just view it as volatility decreasing, right? Like there's just decreasing volatility, decreasing actual interest showing up in the market. So a couple different things that I wanted to mention that I haven't talked about on the channel before is the 200-week moving average. Just over time, the 200-week moving average has been very consistent as far as, we'll get that on a weekly chart, has been very consistent baseline, and is a level that it's a 4-year average, and it's a level that a lot of investors take a look at. First cycle, we just basically hit it and went, and then the last cycle, we actually spent the longest time underneath it. And so again, Bitcoin kind of showing that weakness over time. Like the power law is starting to break down, the volatility is reducing, the volume is reducing. We're actually starting to get even more weakness where we dip below the 200-week moving average for an extended period of time. All of these things kind of lining up to where we are starting to see Bitcoin slow down, lose its momentum, which makes sense in that frame of the 18-year real estate cycle, right? And so, especially because risk assets are going to be the first to get leave the table, like leave or like taken off the table in an environment like that, and they're probably going to be the last to get the money when times are when times start to get rough, they're the first to get off the table. When times become good again, they're probably the last to start seeing the money. So we can still take advantage of the volatility, but it's just understanding what we're investing in, right? It's still a risk on asset. It's not something that it's not yet going has it hasn't yet proven to be the digital gold or the store of wealth or anything like that, And even though no matter how much you believe in the story of Bitcoin, it just hasn't done that yet, right? And so that's kind of what we have to be paying attention. So anyway, I digress. I have a lot of different tools that I want to showcase here just to kind of get an understanding of well, where could we sit in this? Well, the last there I had we were like 36% below the moving average, and you can take what I did last cycle is you can take the averages of like, the drawdowns somewhere between 80 and 75%. They do seem to be getting a little smaller, but it's a moving target, right? So I want to find something that's not a moving target and how can we measure this in another way? And so I have let's see if I okay, yes I do. I have the fib retracement tool and we will just go back in time and we will see what Bitcoin has done historically as far as its drawdown. So I'll take that fib retracement tool and I will draw, oh, excuse me, that's the trend based. I will take that fib retracement tool and basically just get it from top to bottom of the cycle. So bottom to top, and then we will see how far does it retrace as a percentage, right? So effectively, this zero point 0.5 would be 50%, 0.25 would be 25%, 12%. These are really just percentages. It just gives us a calculator from low to high. How far down does Bitcoin retrace, right? And what levels seem to be significant? Now, if you're familiar with fib retracement tools, the 618 and the 382 are significant levels. And then on that, additionally, I have the 50%. That's my favorite. And then cut that in half. That's 25%. Cut that in half. That's 12%, right? So we're just kind of trying to see really how far does it retrace, right? And you can see that we definitely get into the 12% territory. It does dip below 25% that cycle. Now, you can kind of see how this gives us a more consistent measuring tool because we're not dealing with top to bottom, how far does it retrace? We're just as a whole, what percentage of the entire move does it retrace, right? It's just a kind of another way to look at it, right? So again, low to high here, how far does it retrace? Boom. Again, into that 25% region. Getting a little shallower though. Like the last cycle, we retraced a little bit closer to that 12%, you'll notice. But getting a little bit shallower, so take that for what you will. And then let's see, that's another measuring tool that I will get to. And then finally, so let's see where do we stand right now, and if Bitcoin is going to repeat what it does, because I mean, we just all we have is the previous price history. That's all we have to go off of so far. And so you can't just discredit the 4-year cycle because it doesn't suit how you feel about it or what you want. And it could disprove, it doesn't have to follow this pattern either. It can disprove itself, but until it does, kind of have to just kind of have to go for it, right? So anyway, in the cycles past, we've revisited that 25% region. So I will just mark that up on the calendar here. There's that 25% region. The other thing that markets do very often is they will mimic the move that they have previously. They usually do very symmetrical moves. And so I use the fib retracement tool, the trend-based retracement tool all the time. It's very helpful for gauging strength and weakness and giving you projections for double tops, double bottoms, other things like that. But effectively what it is if I measure this move from the high to the low, and because I know that the market can do that, right? So now I'm going to project that move off of this high over here. Okay. And what that means is that this move projected from this point where do we stand? And I've shown this many times on the channel, but it will follow very similar moves, and it gives you price targets. It's actually kind of nice. And so, effectively, right now, what you can see is we're actually getting rejected pretty strongly. Well, we are currently getting rejected off of the 50% level of this move here, but markets can often do, a 100% repeat of the last move or a 150% repeat of that last move. That would be a very severe correction. But I'm still going to mark it up as far as just a zone effectively, right? And excuse me. And then of course we have these bottoms and tops here that I've drug across here, and it happens to correlate with the 1.5 or 150% of that move, right? So I like to use these tools to kind of generate price clusters to get an idea of, it's a broad range, but at the same time, most people are going to basically consider that it'd be almost impossible for Bitcoin to hit 31,000. They might find it even terribly unlikely that we would get into the $40,000 range. And I just don't know that that's actually really all that out of the question based on the price history. But we also know that we can correct pretty severely from the 200-week moving average. Last time it broke 30 some percent. We'll even cheat this up a little bit higher. I'm not sure where, uh, you know, where we're gonna be measuring this, but I'll even advance it a little bit just to be a little bit more conservative. 36%, lands us again in this region, right? So for me, it seems like it's quite possible that Bitcoin has farther to go. If usually they have about three legs in the downtrend. You could argue that we've had two so far, and that could be likely. So and everybody's getting extremely excited right here. Everybody's getting very, very excited. But you can see, I mean, the volume even dying off in this move. Whatever. I still imagine that if we do see any upside from here, we're not going to all-time highs. We're in a bear market. It just seems that way. And if you go back and just study these, they typically have three legs down, and maybe we've had two. So I still think there's room for another leg down. How far we go, I think the time analysis is still going to be very powerful as far as that goes. So effectively, how do you use this analysis to prepare? Well, for me personally, I'm probably going to do what many people are going to do, and they'll probably wait till October to buy, and then I'm going to trade it with the understanding that it's quite possible that we don't see all-time high prices, and we may form lower highs, and we may have that left translated cycle. I think that's what's going to throw people off. A lot of people are scoffing at how dumb it would be to just buy in October blindly. I also think that we probably shouldn't just buy in October blindly, but I think that it presents a good trading opportunity there. Like I said, I've been out of the market since 108 once we breached these tops and we were unable to hold those tops, seeing a whole bunch of other changes of character and things like that. I basically got out of the market. And so I'm not really trading because my whole plan effectively was just to chill and wait for some kind of base to form, some kind of bear market base, wait for the volatility to reduce. Every cycle we've had reduced volatility. You can see low volatility here, and then we took off, and then again, low volatility. But it takes a while. We still have relatively high volatility right now, and you can see that, typically volatility dies off quite a bit before from the highs, it drops off quite a bit before we get another expansion. So markets just need time. I don't think we're there. We don't have any change of structure. We don't have any sentiment changes. We still don't have I'm just waiting for this volatility to reduce before I'm comfortable doing that. And that's my plan, which means sitting tight and not doing anything, which most people can't really do. And so they try to chase the market. They try to, they feel like by doing something they feel like they need to do something, and by sitting that they're not taking action, so they need to take action, so then you end up chasing markets and all the rest of it. Kind of a dangerous game to play. There are a lot of other opportunities right now based on because we're coming into the end of that real estate cycle. There are different assets that perform better. You start to see it in things like wheat, commodities. Obviously, the heavy metals have been doing very well, part and parcel for this time of uncertainty as things start to roll over in that direction. Um, but I admittedly I'm pretty new to the real estate cycle, and I have just chosen because of the volatility that Bitcoin gives that I would prefer to just trade Bitcoin until I have been through the market for a lot longer period of time. I don't really want to try to get fancy with the market in this environment, knowing that we're near the peak of a real estate cycle. It's just, if you know the tide is going to start going out, I'm not really trying to position myself right now. I'm trying to stack as much cash in the next 3 to 4 years so that I can deploy it in the bear market. Actually, since you've made it this far, and I really appreciate it, one story about one of the last crashes. You heard of Hilton hotels. Well, he bought his first hotel in the great financial crash in the 30s. I believe that was also land led. Extreme discount there, but even getting 50% would be insane on different stocks. However, anyway, he bought his first hotel for $30,000, and then that hotel generated him $30,000 of revenue ever since, and then he built his empire on that. So that's the game. The game really to me is nobody's talking about the real estate cycle. Everybody's fading that. Everybody's thinking way short term. Everybody's already convinced that we're gonna go, I don't know what. The ISM and there's a lot of other factors that people are really, really, really trying very hard. It's like they're really trying to make the market go, and it's just like it's just not doing it, right? And so anyhow, I appreciate you making this far, man. You know who I'm talking to. That's what I got for Bitcoin long term. That's kind of the background that I'm seeing Bitcoin. And so I think honestly, the real opportunity is, as much as it sucks to say, is probably like 3 or 4 or 5 years down the road when everybody's completely convinced that there's no way in hell that it could ever recover. That's what they said about Apple and Google and Microsoft and every one of those stocks that survived that environment ended up being the absolute, you know, horse for the next 14 years, right? So that's the other opportunity. I also think that crypto is going to be a huge part of that. I don't see blockchain going away. I think right now it's way too cyber crypto punk, but the irony that I see is that retail got in first. They were able to get in first before institutions. Now institutions are getting in. We're not really seeing higher prices right now because all of the OGs that got in like way, way early are basically probably selling over the counter to large institutions. They're offloading, hundreds of millions of dollars, if not billions of dollars. Is changing hands right now. We're basically seeing a changing of the guard between retail and institutions. I think they have a much longer game than this. I think it's so. What I think is going to happen. This is part of my thesis is that over the course of the crash of the stock market and the rolling over the real estate market, I have this theory that it's just an idea. And so just entertain it while you're here. And again, I appreciate you sticking around. But my thought is that effectively we're going to have this thing bleed out over several years, and all retail is actually going to exit. They're going to give away any of the newcomers this last cycle have definitely gone. Anybody who had faith in this thing and was waiting and waiting and waiting, maybe bought at the last peak, over here, had their chance to make it, but kept thinking it was going to keep going. And effectively, all the retail is just going to lose total faith. Meanwhile, institutions are just going to keep buying and buying and buying and buying because they are thinking 20, 30 years ahead on this. They're going to continue to be building these different blockchain technologies. And so I think that it's going to be, I think it has the potential once risk is on again in a larger way. I mean, we've seen already. I mean, USDT just keeps getting minted. It just keeps coming on chain. Yeah, it has its slowdowns. And I'm not saying that, it can come down here or whatever, but I'm just saying, I don't think all of this money is just going to go away. Keep an eye on this. If money just keeps getting printed, I mean, there's huge incentives for money to keep coming on chain anyway, because there's a lot of spread out there. No matter what you're doing, it's like there's just a huge spread out there right now. So there's a lot of incentive of other people making massive amounts of money off of smaller spreads, but they're just doing it at scale. And so it's working for them. And I don't see that slowing down necessarily anytime soon. So yeah, definitely went on a ramble there at the very end. You know who you are, man. I appreciate you sticking around. Please give me some feedback on this. What do you think? Is there anything else you want me to cover? I do intend to make a video on oil and silver and other commodities and kind of actually get into, because it's new to me to be honest, but I do want to dive into other sectors and how can we get what are the tools that we can use to see what horse is leading the race in those other sectors. So anyway, thanks for sticking around, man. Until next time, stay rebellious.